We're a day out from the election. Bitcoin is back at $67,000. Fred Krueger is joining us live to dive into what we can expect with Bitcoin over the next week and the remainder of Q4. The FOMC meeting that is set for Thursday with a 98% chance of a 25 basis point rate cut. Bear Stearns, they're predicting a $200,000 Bitcoin price. We are going to dive into the possibility of Bitcoin being a Treasury Reserve asset. Obviously, we have to dive into Fred's big Bitcoin book. And then, is this a Trump pump or a Kamala dump or vice versa? We will talk about MicroStrategy, where we are in the S-curve adoption. If you haven't met Fred before, totally missing out. Fred is a math PhD from Stanford, was hired in the late 80s on Wall Street as one of the first prop traders. Fred worked for Solomon Brothers and Greenwich Capital, was trading $1 billion balance of capital, had 10 non-crypto exits, funded and invested in many companies. Fred, such a pleasure to have you on the show. How are you this morning?
Thanks a lot, Sean. Good to be back.
Yeah, real pleasure. So first question off the bat, where are we in Bitcoin's S-curve adoption?
I mean, first of all, it's not 100% sure that we're in an S-curve, right? We're in something at this point which is very statistically close to a power law, right? Does that turn into an S-curve? That remains to be seen. That basically, when a lot of people think about an S-curve, they think that we are about to accelerate into sort of the bottom of the S-curve. And I think that's unlikely. I think the S-curve, kind of S-curve that we might be in is something called a Weibull distribution, which actually means that it just sort of tapers out. So it is a little bit like an S-curve, but it tapers out. So that's just a mathematical kind of difference between some of the typical S-curves, which are called logistic S-curves. And so I don't expect a massive increase like a hump that we're just suddenly going to go completely ballistic and then taper out. I think we're more likely to continue what we are, but maybe really start slowing down in something like 20 years, right? So I think we're in the very early phases. For now, I think the Bitcoin price is behaving very much like a power law, and you know what it does 20 years out, I don't know. I don't know if I'm going to be around to know, but I can tell you that right now it really is a power law for now.
Yeah, cool. No, that's interesting. So the first pod that we did, Fred, was just before the ETFs went live. Ben joined us as well. At that time, you were calling for a $500,000 Bitcoin this cycle. We see Bear Stearns saying 200,000 by the end of 2025. Price really short term is irrelevant. One Bitcoin's one Bitcoin. We've still got this opportunity, and you said it's not going to peter out, for another 20 years. So people can come and stack. But Bitcoin's really starting to become mainstream. It's literally President Trump's talking about adding it as a strategic reserve asset. Do you think that $500,000 is still possible? 200,000, is that bullish or bearish? Like, how are you seeing sort of the cycle after the best ETFs in human history?
So one thing I would say is I'm not completely convinced that this cycle ends in next year. Okay. Yeah. So I think there's a fair case to be made for why we rally for the next 3 years or 4 years or 5 years. Okay. And I think there's a lot of Bitcoiners they're using sort of, I would just sort of say rule of thumb or whatever, just, a data series of 3, right? To say it crashes every 4 years. I don't necessarily think we may repeat that this time. And the reason I say that is we have institutional adoption on a level that we have never seen. We have mining rewards that are getting smaller and smaller and smaller. So I think the impact of mining is just not going to be noticeable in the future, unless you're a miner, right? In which case I do think, those halvings are going to be significant. But I think that, I think we're going to be more into the sort of final stretch of the maturity of Bitcoin. And I think, it's going to be more like the stock market over the last 10 years. We didn't have 4-year cycles in the stock market. I don't necessarily believe that we will have another 4-year cycle. I think that may be over. Doesn't mean we're not going to have bear markets, right? We could have big bear markets, but we don't necessarily, they don't need to be timed around halvings. There's no real reason why this mining reward thing is bearish at all at this point. And there's a lot of reasons why you might think, especially with institutional adoption, that it's not going to stop in 2026. And I think, for example, Matt Haugen of Bitwise said it really well.
Yeah.
He said, look at the gold market, right? When we did the gold ETF in 2004, we had gold inflows, not just for the first year, but not the second year, not the third year. We had gold inflows for like 6 years, or 7 years. And even though the price peaked, I think 5 years out, the inflows kept it going even after that. So I think we are in a very long cycle of inflows into Bitcoin as an asset class. And I wouldn't be too caught up in these mining, I'll call them just mining cycles. I just having cycles. I don't think these things are relevant anymore. So that's what I say as far as the cycles. Now, as far as how far can we get in, say, the next year or two, I definitely think 500,000 is reasonable, right? And how do I sort of roughly get to these numbers? Well, roughly speaking, if you look a year from now, at the power law sort of says that the sort of fair value is going to be around 120,000, something like that, right? Now, the power law, to simplify it dramatically, it will sort of say, if you double that, that's kind of one standard deviation, right? So 250,000 is one standard deviation above it, and 500,000 would be sort of two standard deviations, right? Yep. Now, 2 standard deviations is not really super sustainable, but it has happened in the past quite a bit, right? We were there in 2020. We were there in 2017, right? In 2017, it was even more than 2 standard deviations. So do I think it's possible? Yeah. Do I think if it goes there, it probably will retrace back pretty quickly? I also do, So I think we could get to 500,000, but then we could crash all the way back to 250,000, right?
Yeah.
So Bitcoin does not spend an enormous amount of time at these kind of, peak levels. It gets there, it spikes up, it spikes down. That's kind of what it does typically. And I just don't think as a Bitcoiner that your goal is to try to hit the absolute top and sell everything either. Your goal potentially is you're going to peel away some, if you want at all to peel away some, as we get kind of on the higher side, and then maybe buy back that some if we go down to more fair value or through fair value. But I do think we could, I don't think 500,000, like if we get to 500,000 in 2 years, I would not be shocked, Yeah,
I agree.
And I also may have sold a little bit of my Bitcoin before then. Not a lot, but just a little bit, because the way I approach this is sort of like, I kind of feel like, to simplify it, I think your best allocation is some percentage of your net worth in Bitcoin. And you rebalance that something like once a year. You know what I mean? And, if you're sort of 70% in Bitcoin and then Bitcoin doubles, well, now you're not 70% in Bitcoin, right? Because the rest of your portfolio probably hasn't doubled. So you're probably 85% in Bitcoin, right? So, maybe at that point you peel off 15% and you get back down to 70% of Bitcoin, right?
Yeah.
So I think there's going to be a little bit of that going on, not just, institutions, I think, who bought Bitcoin and who got to their full allocation will do that. But I think a lot more new guys are just coming in and they're just going to buy, right?
Yeah, stack for the next 4 years.
Yeah, the amount of firepower that's left in TradFi. It's unfathomable, and I kind of like, this is a good way I thought of to think about it, right? Which is, if you look at kind of just the US market, right? US stocks is about $46 trillion. US bonds about the same when you throw in corporate bonds and munis. Together, and then you have cash that's about 6 trillion, right? So you put all that together, it's about $100 trillion, right? Well, how much do these TradFi guys have of Bitcoin? Well, it's pretty easy to see. What are they going to own? They're going to own the ETFs, right? Or they're going to own MicroStrategy. Those are the two things that they can own. And, MicroStrategy is worth about $40 billion, and the ETFs are worth about $60 billion. So it's about $100 billion, right? So roughly speaking, they've got $100 billion position in an asset of a total $100 trillion. So they own about 0.1%. That's how big they are.
Yeah.
Nothing. They're 0.1% in. So what I think is that, for that 0.1% to get to 1% is not at all a stretch. I just think that's a given. That will happen. Will it happen over the next year? I don't know over the next year, but over the next 2-3 years, I think we'll get there. And I think if you throw $1 trillion into this market, which is kind of what I think we're talking about, right? Putting $1 trillion into Bitcoin, into an asset that's currently worth 1.4 trillion, and you put a sort of a normal multiplier of 30 on this thing, which is kind of where these things tend to be, I think you're going to get a price of $1 million or $2 million, potentially even. You could get something. Multiple might come down, et cetera, but you get the general drift, right?
Yeah.
There's no lack of firepower getting us to 500,000. None. We could go to $1 million. We could go higher. There's so much money on the sidelines, which is sort of the mirror of us being in such a debt position, right? We've been living on fiat for so long that we produce so much fiat that there's this mountain of fiat that is out there, and it's for 11 months now, it's starting to find its way into Bitcoin, and it's just starting. And so this, regardless of who's elected, this mountain of money is coming for your Bitcoin.
No, I can completely agree. And I want to come back to that, but just staying with the power law for a second, where's fair value right now? So you're saying fair value next year's at about 120K, one standard deviation is about 250.
80K right now. It's like 79,000.
Yeah. And how's that go for a standard deviation under? Like, obviously that's less than 1. It's pretty close mathematically.
Well, so underneath you divide by 2.
Okay.
So it's a standard deviation in log space. So, which if you go, and the number is 0.3. So if you go 10 to the power 0.3, you get 2. If you get 10 to the power negative 0.3, you get 0.5. So either you're going to go down by half or you're going to go up by 2. That's sort of you think, sort of like, okay, we're at 70,000. What's the simplistic model of the power law? The simplistic model of the power law says, okay, next year you're going to go up to 140,000, or you're going to go down to, you're going to go down to 35,000. That's the simplistic model. However, the upside tends to have a lot more volatility on the upside. So we tend to only go down 1 standard deviation at most, and we tend to go up 2 or more standard deviations, right? So that is the sort of the math, the observed behavior in this thing. The downside is very, very sticky. We do not ever seem to go down below 1 standard. Now it's just a pattern. There's nothing forcing us to there. Could we go a little bit below that? We could, But, you know, it is rather amazing that this power law is there with data starting at 10 cents a Bitcoin and going all the way up to almost $100,000 a Bitcoin. So 6 orders of magnitude. So, you know, you got this data that goes from 1 to a million, and it's like it's falling on this curve in log space. So I think the chance of this being random is just very, very low, right? It's very, very low. So, you know, and also the chance of this thing deviating so significantly from it in the next couple of years is very low too. You know, it's just like we've got this pattern that, and it's especially relevant if you start averaging over 4 years. So if you look at, and you can even do this without even going in log space. If you just look at the moving average of Bitcoin price, 4-year moving average, right? Weekly moving average of Bitcoin price, and you trace that, it's just up only, right? Does not go down. Now, if you take the average of Bitcoin price and you take the price in log of Bitcoin price, and you average it over the last 4 years since the Genesis block, you know, in sort of log time since the Genesis block, okay? And you will see that that's an absolute straight line. And there was just like no variation in that line, zero. It's just
interesting.
And so you're like, I show people this straight line. In fact, I can probably find it for you while we're doing this. But if you look at this straight line, you're like, okay, where do you think this straight line is going to go in 4 years? Now, in 4 years, right, the end point of that is exactly, it doesn't use any past data, right? It's all data that's coming from the next 4 years, right? But realistically, you are not going to say, well, I think it's going to go 5x or 2x below. You're going to be like, no, it's probably going to continue along that exact line, right? So, so my point is that it's very, very strong statistical behavior. And it's just, if you look at it the right way, using math, using stats, you will see this is what Bitcoin does. And, you know, people are like, well, the trend's going to break. No, the trend, if anything, is getting stronger. Right? Yeah. So the correlations are getting stronger. The volatility is weakening, is lowering. The deviation from the trend is lowering. So everything is actually converging on this model. So it's not a very intuitive thing. I think your intuition is not great. You know, intuition on logs is not good. Nobody's intuition is good when you're dealing with something that's growing like a power law or growing exponentially, right? Our intuitions are very bad. We're very linear thinking kind of creatures, you know? So we don't have good intuition for this. That's why it's important to plot these things in log space, because then you can start understanding, you know, where this thing is likely to go over the next 10 years, 20 years. I think if you look at it just on a chart, you're not going to get that.
Correct me if I'm wrong, but a couple of descriptor words that you just used, Fred, is like when you're looking at it over a 4-year time period, it's starting to smooth out that line. So what I take away from that is if you're looking at it like on a day-to-day basis or week-to-week or quarter-to-quarter, the deviations can veer off that line either below or above quite a bit, and you're saying only sort of one standard deviation down, 2 to the upside. But is that maybe a more useful, practical, safer way to use the power law? Is like, you know, quite honestly and quite vocally, I'm like, all these laws are absolutely stupid if you're going in there to be able to trade on them. However, what I love about them is every law or chart that we see, or if we just look at the Bitcoin price over time, it shows the solid trend that over time, and I talk about 4-year time scales as well, Bitcoin goes up and to the right. So I guess the question is, when we get to, say, October, November 2025 and it's 2 standard deviations away from the power law. Does it really matter, or should people maybe zoom out a little bit, find out what time frame that they're coming into the space for, look at the power law, and be able to just create a plan beforehand that if it's 2028, it's 2 standard deviations away from the power law, I'm going to sell.
It does have some metric of value, right? So there is a notion, how far are you from trend line? Okay. And, right now we're a little bit below trend line. So anywhere around trend line, it's you don't have physics working against you, right? Your physics is working for you, right?
Yeah.
Now, I would say if we were buying Bitcoin at 200,000 right now, I would say probably still a good buy for the next 10 years, but you're trading at 2.5 times the trend line, if we were at 200,000 now. And I'd say, probably not a great time to just put in your entire position. You know what I mean? So, or if you already have your position, maybe it's time to lighten up a little bit, So, and I think that you can be more rigorous about this with this Kelly criterion and sort of rebalancing kind of percentage. You just say, I'm going to, I will now try to maintain a different percentage. I don't think a lot of people are following the power law right now. So I think it's, because it's not well understood. I think it's a weapon that you can use. And I don't think there's anybody's trying to front run the power law or understand it. And honestly, it's not something you can arbitrage, right? So it's not like, oh, great, I see the power law, great. So now I'm going to go buy Bitcoin and sell futures or do something. And somehow I'm going to get this steady, no volatility road up. It doesn't give you that, right? All the power law tells you is, how high are we likely to go up? What kind of volatility are we likely to have? And, and what does the ultimate gain look like, over a pretty long period? I'd say it has pretty good predictive power for 4 years plus. It has very low predictive power for 1 year, right? Power law does not tell me anything about next year. And, I had Plan C. I was talking with him, and somebody's like, well, if it can't tell me, he goes, where's the power law say it's going to be by the end of next year? And Plan C was like, somewhere between 50,000 and 250,000. And then he goes, well, what kind of law is that? And he goes, well, it's the same law that in 2018, when Bitcoin was at 4,000, would have said it's somewhere between, in 2024, it'd be somewhere between 25,000 and 100,000. And yeah, guess what? We're right there. Yeah. So, it may look like, it doesn't have good power for 1 year, but it makes a pretty striking predictions for longer periods. These are not big ranges, for longer periods. Like if I tell you in 10 years, it's going to be a minimum of 350,000 and a maximum of 2.5 million. That's saying something, right? First of all, the minimum's pretty great, right? Yeah. You're going to 5x your money in 10 years. Amazing, right? The maximum's even better, but also this range is a pretty narrow range for that to predict that. You know what I mean? In log space, it's a line with a little band of 30% either way. So I think it's it's much misunderstood. It shouldn't be used for trading. I do not think.
I think that's where the misunderstanding comes from, because it was sort of being pushed as this trading tool for a while. But I agree with you.
Some people are, look, the power law is just open source code. It's just open source thing. You can replicate it. I can look at it. It's not like somebody's power law. It's just, this is it, but to me, it's the single best statistical way to understand Bitcoin and what Bitcoin is doing. Now, all I'm saying is Technical analysis, not so good. Talking to some Bitcoiners lived through 4 cycles, also not so good, because they don't have they have a very vague memory of things. They don't have a sort of statistical memory. We can all look at the same data, but I think that there's a mathematical way of looking at the data, and there's sort of a very arbitrary way of looking at the data. And I think the mathematical way is better. You should use math if you can. It will behoove you to actually study the numbers, because it'll give you more comfort. And really, the number one thing it'll just give you more comfort to buy Bitcoin, to hold Bitcoin. That's the number one thing it'll do. It will not tell you to sell it. It'll just say, yeah, I probably can be a little bit bigger than I thought I could be, Yeah. And that's what I tell people. It's like, look, you really got to understand this power law, because I think if you really get it, you'll have more conviction. In a day like, last couple of days, we're down to 67. I could care less, but like, and I think that you have to develop that deep conviction somehow. There's got to be some reason that you get that conviction. And if you don't have that conviction, you will die. 100%. Do not buy Bitcoin without that conviction, because you will get shaken out of your position at the absolute worst time, right?
Yeah.
That's what I think. I think it's just going to be.
I agree.
It's just, you're going to have a terrible experience. You're going to be like, look, Sean told me to go buy Bitcoin. I bought Bitcoin. Something happened. Kamala said something or other. Bitcoin said, we just saw it. Like, Bitcoin was at 58,000 not so long ago, right?
Yeah, for 6 months.
58K gang, or even below 58, So you can get shaken out of your positions, but you need conviction. That's what I think.
Yeah.
And so my point is, study the hell out of Bitcoin. Study all these things, because all this stuff will just get you more conviction. That's my point. That's why I wrote the book, because it's just like, I wanted to give people like who are Bitcoiners. I'm not targeting people who aren't already have some interest in Bitcoin. Like, I think if you're just like completely on the fence, good luck. You're going to need some. There's a lot of things you're going to need to do, but if you got a little
fun
bit,
staying poor.
have fun. Yeah, have fun staying poor. That's what I would say. But if you got a little bit of, there's a lot of people who've got like 1% Bitcoin or something, and I'm like, you got the right idea, the wrong percentage.
Yeah.
1% is, Saylor said it best. He's like, if you have 2% of Bitcoin, then you must have 50 other ideas that are just as good as Bitcoin, and you don't, right?
Yeah.
So you don't. So why should you be only put 2% with your best idea? That doesn't make any sense, right?
I agree.
So, I think that's the thing is to really get a sense of, how far this could go, and, and to have a little bit of a plan ahead of time for either when it goes up or down. And that's why I think having some firepower is a good thing. For me, that's a number like 30%, So being 70% long and 30% cash or liquid equivalent, is fine. If the market completely craters, and it continues to stay down, great. We'll buy some Bitcoin. If the market really, really rallies, I will peel off some. I'm not stuck on the actual number of Bitcoin that I hold. If Bitcoin's at 1 million, I'm happy peeling off quite a bit of Bitcoin. Fine, so it's.
Yeah, I think one thing that may help the audience, someone new into the space, like Fred's obviously been here for a very long time as well. It's not like this is just his first cycle. When Fred's talking about peeling off a bit of Bitcoin, he could probably sell everybody's stack combined and still be better off than everyone. So just know Fred's playing a different game. But one thing, Fred, that you said is people need to really build their conviction, whether it's that's why you wrote the book, it's why you think they should really understand the power law and use math. You know, I coined a saying, read the books or eat the bugs. For that very reason, if we don't study the heck out of Bitcoin, we can be shaken up for whatever reason and sell too early or sell it, exit, peel off too much. And when push comes to shove, as shit really does hit the fan, to have no Bitcoin left, you know, if we really are in this dollar debt spiral, it makes sense to know that Bitcoin is the solution. So let's transition. You wrote the Big Bitcoin book. It looks absolutely beautiful. I think you've got, well, I know you've got a copy there, but do you just want to show everyone what it is?
Yeah, so I'll show you a little bit of why we did this and stuff. So basically,
let me bring you up.
Okay.
There we go.
So that's the Big Bitcoin book. And you'll see it's really like an art book, right? So it's unlike kind of it's unlike anything you've really ever seen. And it's we basically decided to make a really high quality sort of Toshin style art book around Bitcoin. And we organized it into sort of two sections. The first part is what was the origins of Bitcoin, the motivations, you know, and so, you know, all the kind of money printing that led to 2008, the Cantillon effect and everything. And then the early kind of road to Bitcoin, right? So all the previous attempts before Bitcoin was sort of the final solution. You know, this is Cynthia Dwork, who came up with proof of work. The first, she's a friend of mine. And, you know, we talked about this proof of work back in 1995. You know, Adam Back came up with another version of the same thing in 1997, much more useful for Bitcoin's purposes. So the whole sort of nonce, number used once stuff. And then, you know, right down to, you know, Nick Szabo and Hal Finney. And, you know, we cover all the stuff in great detail, right? And then we talk a lot about the white paper, all the different innovations, how Bitcoin, the game theory behind the attacking chain and everything. So we go through all that, and then we kind of go through this historically, what were the very first like this is Marty Malmy, who is the first Bitcoin developer, really, to help Satoshi, right? And, you know, he created the first transaction on Bitcoin, the first actual Bitcoin for dollar transaction. A little later, there was the pizza transaction. You know, we talked about that. There we go, Laszlo's Pizza. And we contacted all these people. So we got, you know, we got some new pizza art from Laszlo.
Unreal.
Yeah, we talked to Marty, and you know, we talked to Diffie, who did private and public keys. You know, he's 80, but we got a hold of him. You know,
well,
yeah, and you know, David Shawm and everything. And so then we cover like, you know, 2013. You know, and Charlie Shrem, who we know. You know, and
yeah.
you know, and then we, you know, here's the crash of 2014. You know what I mean? There it is. You know, we went from 1,000 to 200, right? Or 800 to 200, and it looked like Bitcoin was going to completely die, right? Hal Finney's last letter. This is like, you know, the first cycle, the second cycle, and then the block size wars, right? And we talk about casualties of the war, Mike Hearn, and we talked to Mike Hearn, right? And then 2017, which you remember, right, with Bitcoin, Ethereum taking the spotlight, and then we go all the way back to now the third cycle, Michael Saylor finally getting into the spotlight, right, with MicroStrategy in 2020, right, and then El Salvador, and then all the way up to ordinals, you know, controversial subject, and then of course Bitcoin ETF, you know, and our friend Larry Fink, who kind of brought this thing to TradFi, right? And then we talk about sort of more where is Bitcoin today. Bill Miller, kind of how he's seeing it, and you know, just a lot of sort of memes and things about what it is today. Michael Saylor talking about chaos being good for Bitcoin and so on. Tim Draper, who we know, and all these people saying Bitcoin's terrible. Do not buy Bitcoin. Elizabeth Warren. Bitcoin has been tried and it has
Just
failed.
on these people, just on these 4 people specifically that you're showing, what's your probability that they all own a hell of a lot of Bitcoin?
No, 0 chance.
You don't reckon?
I say Kramer might own a 0.1%. I mean, that would be it.
Okay.
Jamie Dimon does not own Bitcoin. Elizabeth Warren, absolutely not. Warren Buffett, no. He'd rather die.
I agree with Buffett. But those other people, I just can't see any way that Elizabeth Warren doesn't own it. She clearly understands what it is, and that's why she hates it so much. Same with Jamie Dimon.
Simon, yeah. Anyway, so that's this book, and we really had a great time writing it. That's my node that I built back in 3 years ago. Just like how to build a node. We wanted to kind of put, talking about seed phrases, self-custody, multi-sig, all the rest. And, then we finish up with a little bit of the history of money and that's it. So this is we really wanted to try to build just a different book, right? More of a coffee table book. But, the main reason we wanted a book that you could open up and you could just orange pill your friends, right? That was our goal, right?
Yeah.
And, because you can give them the Bitcoin standard and, and by the way, we had a guy who was working at our conference and we showed him the book and he's like, yeah, I bought it. And he goes, I want to see it. And I saw him, he read through every single page and I go, we were like, do you have any other books? He goes, yeah, the Bitcoin standard. I tried reading that. I go, how far did you get? He goes, kind of like halfway, halfway. And then I was like, he goes, yeah, I got hard money too. And I go, how did you do? Same, halfway. People don't read much anymore,
Which is sad.
But then it's sad, but it's also just we're in an ADD world, right? Yeah. And the thing about this book is you don't have to read it from cover to cover. Literally, you can open it up anywhere you want, and you can just go, oh, yeah, mining pools. Oh, that's cool. That's a cool graph. And sort of was a little bit inspired by my Twitter, right? Because, I got a lot of Twitter because I produce the same way Michael Saylor does, just lots of tweets and memes and stuff like this, And I wanted to kind of encapsulate that newer way of thinking, right? That newer way of showing information, which is, just like a very small words, like, have fun staying poor. That's why we made this book, HFSP, just like, and, we were talking to our designer and we're like, look, man, if you want, I want you to go completely nuts. Make it like, you're doing a diagram for a modern art museum. You know what I mean? You walk into a room and there's, everything's there except there's one light bulb that's on or something, and I want you to make the point like that. Ultra minimalism, but it should be like an art experiment, And he goes, I love it. I love it. I love it. So, a lot of these diagrams and stuff were because we kind of we pushed this artistic idea as opposed to let's just write a bunch of words, right? And in point of fact, that there's no audio book or anything. It's not an audio type thing. It's a visual book, And we're just so fortunate to work with this great designer who found us, right? So he found us. Basically, we're just pontificating on maybe we should write a book. I said maybe we should write a book about Bitcoin for capitalism or something. So probably would have been a stupid book. Anyways, I started that idea. And then this designer is like, well, Fred, I see you're gaining some Twitter following. I like your tweets and stuff. I like some of this idea, but maybe I think your format really matters. I'm like, what? Format matters? And he goes, yeah. He goes, I'm like, I just think that you could make it much more, tell a much different story if you told it in images and just, we just blow up these tweet ideas of yours and stuff. So anyways, we're like, and he's like, I'm a Bitcoiner and I read your Twitter and stuff. And so he goes, I'd be just very interested in working on this project. And of course, he didn't realize that he was signing up for like 2 months of solid. But anyways, he loves it. It's actually
awesome.
well, but it's just we wanted to do something a little different, and that's I think you have to try something a little different if you want to kind of stand out a little bit from the crowd. So I think I think most of the people, everybody who's gotten it loves it, and I think that's just I'm hoping that we're sending a whole bunch of these things out this week to all the kind of the Senator Loomis, Toomey, Cinema, JD Vance. They're all getting this, as well as everybody you're going to see, Joe Kiernan and Squawk Box and all these guys. They'll all get it, all of them. Okay, and my only goal is that sometime in 2 weeks, they're all going to be like, yeah, I got this kind of really good looking book, art book on Bitcoin. Hey, Joe, what do you think? Yeah, I got one too. Yeah, it's really cool. I've been telling you guys about this Bitcoin thing. It's true. I'm not even going to say, here's a book, Joe. Just send them the book. That's it. Like, nothing. You just, that's it. It's just our gift to you, Joe Kernan. Like, have fun. Have something that you can show your kids and the people that go into the Joe Kiernan house, That would be a really great propaganda. You know what I mean? Like that's kind of one of the things that we thought of. Obviously we wanted to do it for ourselves to have all this information in one place. But also we just thought, God, it would be really great if we could get some of these guys to kind of encapsulate all the energy and love for Bitcoin that we have, right? But it's really hard to push that into some guy at some meeting, at some elevator, and we all through it. It's so hard to orange pill people, and like I got
it truly is.
I just I talked to him this morning, and he's just like hopeless, hopeless. I will never orange pill the guy. Doesn't matter.
Yeah, it sucks. One thing, I guess, where can people get it? I think you've still got signed copies left. You're shipping them out in nice special boxes.
We have sort of two things now. We have these second editions that are similar. They're not numbered. These ones aren't numbered. They're numbered in the print. The first editions are numbered, so it says 6 out of 1,000, and they're printed like that. So it's a complete pain in the ass to do that. And they have this ordinal of authenticity. Second editions are unnumbered, but they're still limited. And they can go to bigbitcoinbook.com. And then we have these sort of gift boxes like this with which have the signed original version in there. And that's it. That's what we got, and we're selling those things out. And we didn't expect them to sell out so quickly. So we sold out our first 900 copies in 13 hours, and so we're like, oh shit, we don't even have enough to give to. We want to have all these people we're going to give to, and we don't actually even have as many as we thought. And then we had everybody was like, well, how do I get them? How do I get them? So we made a second edition, but we can't. These things they're not like print on demand. You know what I mean? You have to kind of organize this whole thing, and it takes months to get through this stuff. It's all offset printing and then a special bindery. So then and we'll see. I'm not like in the printing business, I'm a Bitcoiner, but it's a super interesting project, and I wouldn't mind doing another one at some point. Like if I can get Michael Saylor to help me write the third edition, I'd do that, or Nick Szabo. Right. And Szabo has intimated that he might be interested. So we'll see. But the third edition, he's sort of interested in more of the history of money. And I think that we could also talk a lot. I mean, Saylor's got so much material that he could add, with the energy stuff and,
corporate adoption.
So I think there could be some really, look, imagine this book co-authored by Michael Saylor. Now, he didn't say this, right? But I'm just saying, I have not had a conversation with him. But imagine that. How great would that be? Everybody be like, oh, yeah, I got to get that book, right? So I don't know. Maybe we have the third version. That's the Sailor edition or the Sabo edition. And either one would be fantastic. I just want to do something. I don't want to just do the same thing now. I want to do something different if we do another one, we'll do something different, and it'll be sometime next year. So we'll see.
No, really cool. We don't have a crazy amount of time left, but a couple of things I want to talk about. MicroStrategy, I want to get to, but let's save MicroStrategy for last. We've seen like crazy adoption lately, like the Argentina central bank's been mining Bitcoin. There's an announcement today by a telco provider pairing up with a bank with Bitcoin as well. Then we have like pension funds in the UK, Florida, all adopting Bitcoin. How do you see like that playing out over the next couple of years, say over the next 5 years, central banks, pension funds in particular?
Well, I think, a lot of that depends on what happens tomorrow. Okay. I think the most interesting thing about potential Trump election is this idea of a Bitcoin reserve fund, right? And I got extremely excited about this when we were talking about it in Nashville and everybody was talking about it. And then we're like, will Trump make the announcement or not? And, RFK made the announcement, and then Trump sort of made the announcement, and then Loomis put this bill out. And, look, I think it's an amazingly great idea, right, to have this reserve fund. If we get a reserve fund and America builds that reserve fund, and I do think if Trump gets in, we'll get some version of that. It may just be, we're just going to keep the Bitcoin that we already have in the reserve fund, right? To start, we'll start with that. But it may be more than that. It may be we're going to add X amount of Bitcoin per year in this reserve fund. If this happens, I think other nations are going to see that this is like, you just gave me the green light to do the same thing, right?
Yeah.
You guys are doing the reserve fund. Well, hello, Dubai. You know what I mean? They're going to do the same thing. So I think that is I think on the other hand, if Kamala gets in, I think that might postpone that a couple of years, but I definitely think if Trump gets in, we could start seeing that next year. We could start seeing we could see us adopting a reserve fund, and you could see, maybe even Europe saying that they're going to do some, Bitcoin reserve, or Australia, who knows, right? But I just think sky's the limit if we start seeing the US doing a reserve fund. So I'm super bullish on that. MicroStrategy, it's on a tear. I own MicroStrategy calls. I own some, they're pretty much in the money now. So it's essentially like I own MicroStrategy stock. But I did not expect this to have this kind of premium that is trading at currently, right? I think it's it's exceeded my expectations. I would never short it. I don't think partly because we have this thing called Bitcoin. Why would I do something like short some other company or try to it makes no sense, right? Like the play that you have to do is owning Bitcoin. Now, if you can own it as Bitcoin, I think that's the best. If you can't own it as Bitcoin, then you have to go for something like MicroStrategy, right? It's more risky. There is more risk of it because that multiple could come down. So, in the longer term thing, I think Bitcoin's going to do so well over the next 10 years that even if you buy it at a 3x multiple and it goes to 1x multiple, if it goes up 20 times, you're going to be fine, right? But I don't think it's especially for people who've owned Bitcoin for a while, they're not going to take a tax hit and buy MicroStrategy. I think the real question is, right? The real question is, and I also don't think that if you got Bitcoin in cold storage, are you really going to sell it and buy a stock which has a third of the Bitcoin that you have in cold storage per Bitcoin? You're not going to do it, right? So I think, but on the other hand, if you're a, an entity that can't invest in Bitcoin and you really want to get exposure to the Bitcoin price, are these convertible bonds possibly a good idea? Not bad. You've got your downside that's protected, right? They're probably going to be money good. And you have some upside possibility if Bitcoin goes up as much as we think it is, you make double your money, So I think it's a different audience, really, for the most part. Now there are some Bitcoiners who are, playing in this space,
Of course, yeah.
But I think for the most part, it's sort of institutions who can't buy Bitcoin. So I really think that there's a pyramid. I think if you can buy the real stuff, buy the real stuff, right? I think there's some advantage to getting the ETFs as well. And I think the advantage is, you have money that's sort of in the system with the ETFs, right? So if they ever start clamping down on self-custody or close the, make it more difficult to sell Bitcoin, they could, right? They could do that, right? And I think if you may want to have some, I was talking with a guy from Norway the other day, and he was like, Fred, like in Denmark, they're talking about this unrealized capital gains tax. And I go, well, if you own MicroStrategy, would you be subject to the tax? He goes, no, that would be fine. And I go, oh, okay, so they're only going to tax Bitcoin, not a company that owns Bitcoin. He goes, that's right. And I said, well, what about an ETF? He goes, no, that would be fine too. And I'm like, all right, so I would say you should probably put at least some of your money inside the system, if I were you,
Interesting.
Because, they could make life very tough for you if they sort of they start criminalizing, non-custodial self-custody Bitcoin, right? They could sort of say, well, okay, where did you buy this Bitcoin exactly? I'd like to see all the receipts of every single thing you bought, and who did you buy it from? Did they KYC? Do you have their names, addresses, and passport numbers? Oh, you don't. Are you trying to hide something? What? And I could just sort of see us going down this dark road under a Democratic, I could just, you never know.
As well in socialist Australia.
Some guy knocking on your door, sorry, you have a pet squirrel in here. We're going to start euthanizing it. You know what I mean?
Yeah.
I don't know.
Oh, mate, that's crazy. Can I just jump in real quick? For everyone watching us talk, and I was messaging with Jeff Yu yesterday, the CIO of the Monochrome Bitcoin ETF. He was helping me out with someone. So I'll bring Jeff back on and dive more into the ETFs. Fred, we've only got a few minutes, and there's two really cool questions in there. This one's from Shane. There's two parts to it. I read a news article that the cost of Bitcoin from mine is over 83,000. He corrected it. It's actually $96,100.
Those are Australian dollars?
No, I'd say the 83,000 would be 83,000 US. I'm pretty sure I read that. So yeah, of course it is, because the Bitcoin price at the moment is like 104,000 Aussie dollars or something like that. Maybe it's just under 100,000. But basically the point is, Bitcoin mining, it costs more to be able to mine it in electricity and on cost than what it is currently. But then the second part, so fair value is apparently lower than it costs to mine. Can you ask Fred how that works?
Yeah. So, okay. This fair value number is a number from the statistical measurement of power law. It has nothing to do with mining or the cost of production. I think there's a mistake that a lot of people make, that thinking that mining has to determines the price of Bitcoin. I think the relationship is the other way. All right. You have adoption that determines price, and price determines mining, right? And right now, there's a lot of miners competing for that hash rate, and they're making certain expectations of the price, and they're looking at the price and they're saying, what is my marginal electricity production, and does it make sense for me to go mine Bitcoin? And it is not the case that you should look at, I think, the mining hash rate and try to deduce Bitcoin price from that. To me, this is a consequence of that. And honestly, as I sort of said earlier, I just am not that interested in mining. I think that, to me, mining is like the Hunger Games. It's sort of like, you've got all these competitors. 80% of them are going to go out of business. It's yes, it's needed for the ecosystem, but let the games begin. Let the miners let the gladiator games begin, and let them chop off each other's heads. Fantastic. Bitcoin doesn't matter. TikTok next block.
Love it.
We don't care. They may really have a big problem with the 83,000, but I don't. We don't. And some of them will go out of business, and then it'll be, then it'll cost less to mine because there'll be less competition. So, there's just too many gladiators in the ring right now. Time for some gladiators to kill other gladiators.
No, love it. It is cutthroat sport. So this one's from Eric, and high level, I think this is in regards to the power law. Fred, truncate the historical data set arbitrarily. Will that impact the upper lower control limits in the model if shortened timeframes? I'm going to pull you up full screen. I'll be back in about 30 seconds. I'll leave that one with you, Fred.
Okay, so that I've seen this argument. This is like not a good argument at all. And Giovanni has a pretty good counter to this. It's sort of like saying, where do we start the measurement? And say, well, it's an arbitrary thing to start it at the Bitcoin Genesis block. Well, no, it isn't an arbitrary thing, because that's kind of how the virus originated. The virus originated at the Genesis block. And yeah, if you look at time, 5 years later or 5 years earlier, you're going to get a very different fit, and it's not going to be as good. But this, to me, is a very, very straightforward calculation. And, listen, I think that hundreds of people have tried to discredit the power law. Nobody has succeeded. It's a robust model. And I will say this, I'm in a chat room with 10 other math PhDs, including degrees from Caltech, Harvard. We have Giovanni, the astrophysicist. We have Plan C. We have Sina. We've looked at this data far more than you will look at this data. We've analyzed this data up, down, sideways. We've looked at it. We've ran every mathematical test that we know of. I pretty much spent my graduate years in the statistics department at Stanford. So I know what I'm talking about, and it's not some arbitrary truncation. This is a real deal. And it's once you really see it as a math guy, you're not unseeing it. Okay. Now, they're always going to pull some math guy as evidence to support their claim, but I can tell you that it sits in a very, very strong position right now. And it's not just one law of price. It's also the adoption, right? If you look at addresses that have 1 million sats, addresses that have 10,000 sats, addresses that have a Bitcoin, addresses that have 10 Bitcoin, those are all power laws. The hash rate itself is a power law, T to the 12th power, right? And it's a power law that has existed over a 12 orders of magnitude, right? 12 orders of magnitude. It's like a quadrillion. So the hash rate has gone up 1 quadrillion since Satoshi, and yet it maintains on a log basis its linear with an R squared of 0.96. Now, like when you see stuff like that for a quadrillion, 10 to the power 12, we are getting almost to astronomical levels here. You know what I mean? This is not like, Microsoft went up 3,000x versus the IPO. That's 10 to the power 3. This is 10 to the power 12, okay, hash rate. So, when you look at these kind of things like this, it's just not an accident. It's not an accident. This is real. Now, could this thing suddenly change? Yeah, it could. Anything could change, right? It could flatten out, right? That could be the case. Or we could have more bots and we could have more, B2B stuff. And maybe we continue and maybe growth really, who really even understands what the world's going to look like 20 years from now? I certainly don't, right? I don't know. I mean, AI, we're going to have something approaching sentient AI in 10 years. It's pretty clear, right?
It's
So
already
I don't know.
super crazy, hey?
It's already super crazy, right? But like 10 years from now, like just imagine that. So we're talking about the price of Bitcoin in a period where I'm already feel like I'm talking to Hal, in 2001. And, literally it will be talking to Hal in 2001 and 10 years from now. And so I don't know. I think the math is really, really solid on this stuff. And all it does is just point right back to the fact that you should just be loading up on Bitcoin. That's what it tells you.
Yeah.
And disregarding any fall. Like that's what you're supposed to do. And you can listen to you and me, or you cannot. You can have fun staying poor. Like I don't know. Like we can tell you, and we've been telling you. Last time we were on, Bitcoin was on 40,000, right?
Lower, yeah.
Right, it was at 40. Now it's at 67,000, right? Okay, so it's gone up a little bit since we talked. Okay.
Yeah, 38K, I think.
The next time we talk, it'll be above 100,000, and we'll be like, so now it went down from 107,000 to a mere 100,000. People are worried. What do we do? I mean, it's like it's a fractal like experience, right? We're having the same Groundhog Day thing at different levels, and really, there's just one thing you can do. You got to get in. You got to get into Bitcoin. That's it. You just got to get in. You should do your education. Read, watch 100 hours of videos, buy the big Bitcoin book, buy the Bitcoin Standard, consume a ton of this stuff because you're going to need it to rewire your brain, because your brain, I think this is the kind of thing that you and I probably felt, right? Is our brains were wired the wrong way.
100%.
And now that our brains are we've corrected the wires, we put them in the right places. Now we see things straight.
Yeah.
But we didn't see things straight, before we became Bitcoiners. We had this sort of vague slush there about what was happening in the world. Now it's pretty clear what's happening in the world. They're debasing the money supply. You're going to be poor. AI is going to take away all the jobs, and and this is the one shot at not being poor. This is it. And in fact, you can become very rich. So that's my pitch.
I've got a hard stop literally in 4 minutes. So rapid fire, but you're doing some really interesting things with Twitter Spaces. Yeah. You've called them Bitcoin First Spaces. They're a daily Twitter space, weekdays only, Monday to Friday, US time. But if you can dive into what that is, what you're trying to achieve, how you're trying to reach a larger audience, maybe not already just the Bitcoiners in Bitcoin, but to be able to expand that, where people can find it, I'll bring you up full screen.
Yeah. So what is Bitcoin First? Basically, I started these spaces like other people, but I just started them. They became very popular. And, sometimes these spaces get a little out of control. And we wanted to bring a little bit more format to these things. So me and Wayne Vaughn have decided to kind of create a structure around this where we have a space from 8 a.m. Pacific time to 10 a.m. Pacific time on weekdays. And we have a cast of regulars, and it's not exclusionary. We can invite new people in. But basically, it's the regulars who are about 20 of us, and whatever guests or whatever topic that we're talking about. And we're trying to really kind of create I would say, more thoughtful, high-end discussion around Bitcoin only topics. That's the only thing we're interested in. So we're all Bitcoiners, but we're interested in Bitcoin first, but also anything that Bitcoin touches. So MSTR would be fair game. Bitcoin options would be fair game. Ordinals would be fair game. You know, anything that's Bitcoin related, right? Borrowing on Bitcoin is a topic that came up a lot at that. We had a Bitcoin First conference with huge success. And basically what we did with this conference is we said, what we're going to do is we're going to have 4 simultaneous groups, and we're going to have these crowdsourced topics, and we're going to have everybody participate in a discussion around this topic. So for an hour. So a topic would be lending on Bitcoin. Great. So we have like a couple companies that are involved in lending on Bitcoin. We have a couple people who are interested in lending on Bitcoin. We have people talking about the Cantor Fitzgerald lending, what's happening, when's this stuff happening, what are the kind of risks in this from different perspective. So these are the kind of things that we had a really great experience with Bitcoin First. And it was sort of a nonprofit. We're not doing this to make money. We're not trying to compete with Bitcoin Magazine. But basically, we wanted to have a really good format to bring people up and engage, not just one-on-one, just like we're doing here, but engage with a community of high-end Bitcoiners, right? And so, you're welcome, Sean, to come into that community. You want to pop in, be one of the group, come on in, you know what I mean? And so that's sort of the thinking behind it. And we will probably have another event. We're sort of still in the planning phases for the first day of Vegas. So we'll be one day before the Vegas Bitcoin event happens. And we'll just do a one-day event at a high-end hotel in Las Vegas and just redo exactly the same format and invite people from the first, the people who attended the first one would get first crack at it, but we'd invite a few, maybe another 100 people from TradFi and other areas who didn't, other Bitcoiners didn't get the first one. So just a very focused group of people, and no speakers, no sponsors, no stages. Yeah. So
Love it. Sorry to cut you off. I do have a hard stop, but for everyone watching, I've put Fred's X link below, and check out the bigbitcoinbook.com. Now that shipping is a bit cheaper to Australia, I'll be ordering myself a book as well. Just let everyone know, if you hit subscribe, I do have a video I'm recording with Mark Moss on Wednesday as well, so that podcast will come out. But Fred, thank you so much for your time. Let's not make it as long. It's been a crazy year. I always love chatting. I don't agree with everything, but that's what I love about Bitcoin, is we can expand this conversation and learn. And you come from a mathematical background. You're an absolute genius. So I always love you taking the time out of your day to be able to spend and send the signal for everyone. Thank you.
All right. Thank you very much, Sean. I'll see you later.
Cheers. Thanks, everyone. Bye.
Okay, cool.